Hi, this is Simon with Trade and Perform Coaching. This is the trade review for August 2nd, 2013, NFP Day. The quick legalese, this is for educational purposes only. Nothing in my videos, on my blog, or in my Twitter stream should be construed as trading advice or recommendations. Trading futures is extremely aggressive and you can lose all your investment in trading futures. And that's true for stocks and options as well. So consult your trading professional before making any decisions about whether trading is right for you. So let's take a look at the day. Again, Friday was pretty straightforward. I mean, it's probably about the most boring, flat, uneventful non-farm payrolls day I've ever been around, at least in recent memory. So the first thing that I'm looking at, let's kind of go over, because I think it helps most people, how do I approach the day when I'm getting ready to trade? So the first thing I noticed, even though I don't have a chart up here, was the reaction was muted right out of the gate for non-farm payrolls. Think about, well, what kind of reaction do we usually get? 10 points, 20 points, 5 points, 3 points? Well, we usually get, from my recollection, anywhere from 5 to 15 point moves off of non-farm payrolls, and sometimes it can be volatile. Shoot up 10, shoot down 10. That wasn't what we got here on Friday, not at all. And so that was the first sign, even before the market opened, that things might be a little muted, they might be a little different. Normally on non-farm payrolls, I'm just as likely to say, okay, I'm going to skip non-farm payrolls. And the reason why always goes back to my core philosophy. First of all, this is a business for me. It's a business I love, but it's a business, and I'm interested in entering the market when I have the greatest odds of making the most amount of money with the least amount of risk. That's what everyone wants. It's what I want. So in this business, since there's no barrier to entry, you can click your mouse at any time. You have to decide when that time is right for you and have the will and the ability to actually execute that plan. So what's the first thing that I look at? Well, I come over here. Let's take a look at an old non-farm payrolls. This is our last or prior one at the beginning of July. And look at the range here. This is NQ down here. We'll take a look at it in a second. Look at this range. This is from the open. 1624 just in the first 5 minutes. 1620, let's see, 1624 is right here. Let's call this 1622 all the way down to about 1616. That's about a 6-point range in the first 5 minutes. Okay. This week, what do we have right out of the gate? What did our range look like? Well, it was so tiny, I'm going to go to a 1 minute range. Look at this. This is a 1 minute range here. 1699 down to barely 1696, and that took a lot of time. That was way more than 5 minutes of time that elapsed in this little area here. So first thing is, it's going to be a muted day. I'm not expecting a wide range for whatever reason. Next thing I'm looking at, normally in a non-farm payroll day, why do I avoid, or why am I very cautious about where I trade? Because normally if a 2-point stop might handle it here, I might need a wider stop to make a trade stick. And the pushes can be amazing. Look at this push at the end of the day here, from 1616 all the way up to almost 29, 1628, let's call it. Okay, that's a 13-point move, and essentially it was the last hour of the day, the very end of the day. That can cost you a lot of money, and by the way, this is exactly why I say caution at the end of the days, that I do not fade markets. I don't like trading the last hour in general, but once we started approaching these highs here, fading these is a bad idea. In this particular case, it was a great way to lose almost 5 points in a quick hurry, and if you really screwed it up, you lost 10 or 13 points. And by the way, when people lose money in trading, and when I say, well, you're going to lose, most small traders don't take 5, 6, 8, 10 point stops. Just doesn't happen. What they end up doing is taking a series of 1 and 2 point stops row after row, so that by the time you get let's say you get a 13-point move like this, well, a small trader might have a 6 or 7 point stop net plus commissions. Because they've come in and out so many times, desperately trying to capture the move. One of the ways that you can really help yourself in that is in limiting the amount of trades you can take in a certain period of time on any one security, or any group of securities. For example, my trade plan is such that it'll rarely be that I should have 2 trades within 10 minutes of each other, unless I'm just straight up flipping from one zone to another, but it's rare. And particularly with the trade I highlight where I'm targeting 8 ticks on a trade, I do have a swing trade that obviously I would target more on, but there's going to be very rare where I'm going to have 2 points in between zone to zone, and I'm going to get that 2 points and flip and go the other way. So one of the rules you can do is once I've taken a trade, I'm going to stop. I'm not going to enter another trade for 30 minutes, 20 minutes, 15 minutes, an hour, whatever it is that you need to give yourself that space so you don't get into that crazy clicking, stopping, clicking, stopping, clicking, stopping. It happens a lot. Anyone who doesn't believe me can check with FT71, and he will tell you about the number of traders that get into this panicked and crazed trading, and it kills your account. And it can happen with traders that have $10,000 in their account. It can happen to traders that have millions of dollars in their account. Give yourself the space to be able to see what's going on. Keep a calm mind and let the market come to you. So moving on, I hope that wasn't too preachy. If it was, shoot me a tweet and I will never do it again. So moving on, let's take a look at how this day unfolded in ES. We opened below the white zone. Again, what does the white zone mean? The white zone does not mean if it's underneath that we're only going down, and if it's above, we're only going up. What it does mean is when we're on the bottom side of this white zone where sellers are in control, I don't want to look to take a long here. Okay, this is a crummy place to take a long. I'd rather take a long here and get paid because I know that I have a better chance of it moving up like this than taking a long on the, or once we've established that sellers are control here. And if you look, we open below the white zone. First thing it told me is I'm not looking long right away. Now what I may do is from this point down to this point, yes, I might look long. There's 4 points here. The other clue that gave me an idea of looking long was look how slow this was. This is non-farm payrolls day, and this was like we were in Chop City right out of the gate. This is the first 10 minutes right here. It took a full almost 30 minutes to get down to pre-market support, nice and slow and easy, and kind of hovered over and tagged right into it. Normally I would not take a long there had we just kind of flushed right through here. I would not have been taking a long, but we walked in so nice and slow down to the zone that based on price action, meaning slow price action, no one was really pushing. I felt I had a good trade here. Now, the other thing that I will say during summer times, normally my target is 8 ticks. I will lower that target on occasion to 6 ticks if I feel like I can't get my 8 ticks out of it. And that is simply to prevent me from having to sit there for hours and hours waiting for my next 2 ticks, which can happen during summertime. So you got your entry here and you were done. This right here, here to right here, 2 points. And I'm going to start keeping the spreadsheet again. I had the spreadsheet turned off, but I'm going to keep the spreadsheet of this trade, of the first 2 trades of the day, so that people can start to see what it'll look like as you leverage the power of a high odds trade over and over again. So we came in and then we very slowly, what did we do next? We crawled right up to the white zone. Now, the white zone is my highest odds trade of the day. And again, describing aggressiveness there from a psychological point of view. The only reason the back of the zone is less aggressive than the front of the zone, well, there's 2 reasons. First of all, obviously to get to the back of the zone, you have another 2 points of stretching that's going on there. So as you get more and more stretched in a move, okay, the less power or the more power it would need fresh buyers to come in to continue that push, and that gets less likely as you push up. From the white zone, based on the way that I calculate the white zone, I know that I have a good odds of getting rejection from both the front, the middle, and the back of that zone. So I tend to be aggressive there. What do I mean by aggressive in this sense? My stop has to be back over here for anywhere from 2 to 3 points, depends on your trading style. Okay, so that means I have to be willing to take anywhere from 3, maybe 4, some cases depending on the trader, even 5 points of worth of stop back here. And that can be painful, particularly considering the risk reward is inverted there. Okay, I'm only looking for 8 ticks. I'm willing to take 12 ticks, even 16 ticks worth of loss. You better have a very high win rate if you're doing that, and in this case I do. So again, took a short right at the front of the zone. You had to have your short in pretty much off the open or when we were down in the prior zone to get filled here. Most people, if you try to get this hit, you'd have to go either a tick in front of the zone, which I generally do not advocate, or you simply didn't get the trade. And obviously you got your 2-point rollover. Now at this point, that's 1-2 trades. That's 4 points. It's all I need to have in the bag. It's summertime. We already know it's going to be a muted day, and I pretty much left. Well, I left when I covered this actually. My morning was done. I took an extra long lunch. I came back in the afternoon. Now, the other thing you're going to notice is look all day. Higher lows, higher lows, higher lows, higher lows. You have to be cognizant that when we're making higher lows, that's a trend. It's not something I trade off of. I wouldn't say, well, buy the trend line back, but at least look at it and go, we're making higher lows there all day long. I don't know that I want to stand in front at the end of the day. It's a Friday afternoon. There's no one here. Anyone who wanted to be in the Hamptons or wherever anyone else goes was pretty much gone. I was back because I took a 4-hour lunch and I had nothing else to do at that point. So realize taking a short in here is a long shot any day. And had we been at lows, I would have said just the opposite. Taking a long would have been a long shot, but it wasn't. We've been going up all day. The market's been going up. We had the same scenario on NQ, just a little bit different scenario. I want to go over real quick in NQ, which was we opened right into the white zone. Now, in order for this to have been a long in the white zone, I would have needed an open above the zone. As it was, we opened in the zone. It gave you your 5 points of rollover right here. That's a trade that I look for on a regular basis. Again, right here, buyers established control. We rolled back into the zone, back of the zone held, and we were pretty much in a straight up uptrend all day long after this initial rejection in the first half hour. And again, called it before this came in right here at the top of the hour. This move up here, same situation. There was no need to short. Looking at the bigger picture here real quick, just kind of drawing this up here the other day for one of my clients, and look at the pattern we're in. Up, consolidate, all these closes were in the same area. Up, consolidate the gains, we've gone up again. So what I need to see, first thing I need to see in order for me to think, oh, we may be going down or we may be correcting, is that I need to close here below this 1695, 1694 area for starters before I'm really thinking, oh, we could roll to the downside. Again, this is all bigger picture stuff, has nothing to do with an individual trade. Number two, I'd like to see more than just one close below the prior day's close, which we haven't had at this point. And if you'll look, this is something called one time framing on a daily basis, and that is where the low of the next day has been consecutively higher than the prior day's low. And you'll see that's going on for 1, 2, 3, 4, 5, 6 days. And you get a clue that that may stop when you have something like this right here, but even there it did not happen. You actually didn't have the clue of a consolidation until we got a day like this, where we ripped down and we closed below. And even that didn't lead into a downtrend, it led into a consolidation. So will the market go down one day? Yeah. Will it go down big one day? Yeah. But if you're a day trader, and you have to know who you are, not a swing trader, not a position trader, if you're a day trader, okay, what do you care if the market's beginning to downtrend or not? You're in it for the next 2 to 10 points anyways. Most day traders are in it for the next 1 to 2 to 3 points anyways. So set yourself up psychologically to win. Stop thinking or stop trying to figure out where the entire market is going to go, what the news means, whether we're going to go to zero or not go to zero. All you have to focus on is where are the buyers, where are the sellers, and where is the market stretched, and put together in one cohesive package so that you're repeating your trades day after day and you're stacking your profits in a very manageable and executable way, so that every day you can look and go, okay, I've had 5 or 6 days, 7 days in a row where I've traded profitably. I can increase my trading size now. Repeat that process again, 5, 6, 7, 8 days of trading profitably. I can increase my trading size again without going back and trying to increase the number of trades you're doing. Focus on the trades you're mastering ahead of time. Anyways, this is Simon. I hope you're having a great weekend. I am with Trade and Perform Coaching. If you have any questions, feel free to email me. You can find the email at the top of the blog. Have a great weekend, guys.